Hello everyone again, welcome to this new supply and demand analysis for the 8th of February 2021. This is the trading disclaimer. You can pause the video and read it at any time. Okay, let's start. First one on the list, dollar index. Well. As explained in previous analysis, we have the monthly area of demand in control. We also have the weekly area of demand in control, and that's why price is reacting. It's trying to reach the weekly area of supply where shorts will be possible again, but that didn't happen yet. On the daily, we have this area of demand on the daily, but it doesn't have a strong departure, really. So this is weak, no longs possible. This is stronger, and that's where we were waiting for price to retrace. It didn't happen. The 4 hour is already out of alignment, so no longs allowed over here. Potential shorts on the way down following the weekly sequence. Longs lower. And on the Euro dollar, we have a very similar scenario, but upside down. We have the monthly area of supply in control, the weekly area of supply being in control. It tried to reach the weekly area demand. It's rallying again. And we have, let me see, I believe we should have a 20 EMA confluence over there. On the weekly, around there. No, moving average. Yeah, exactly. So, longs are near to demand. We have one area of demand over there of this confluence. No shorts right now. This is a weak area of supply. This is also a weak area of supply, even though it played out. We need strong areas of demand. This looks right now good. On the Aussie dollar, monthly in an uptrend, weekly in an uptrend, weekly demand in control, daily demand in control, daily bullish engulfing patterns, new areas of demand, long bias. Aussie CAD, monthly in an uptrend, weekly in an uptrend, trail line confluence, weak area of supply under attack, longs of new areas of demand are created. We have 2 areas of supply in control, so we need new areas of demand. Probably it could pause here, okay, and then could rally again. So let me see. Okay, good. Aussie yen long bias, monthly uptrend attacking this weak tested area of supply. We're expecting this to happen. Weekly in an uptrend, no retracement to the weekly area of demand. It did retrace to the daily area of demand. Brand new area of demand is being created. New areas of supply are being created. This area of demand is valid. Well, it's a new area of demand because it broke the trend line. It intersected with it and rallied. Aussie Kiwi, monthly demand in control, longs and years demand. This weak area of supply, it's under attack, only 1 year C. Weekly area of demand has been created. As explained in the previous analysis, monthly area of demand, longs and years of demand. This is poor demand on the daily, poor demand on the daily. This is stronger demand on the weekly. It has 2 year C. Kiss the level, then rallying, potentially creating a new area of demand for longs. CAD yen, attacking that monthly area of supply, weak area, weak structure. So, long bias, daily average demand created, new one being created over here, long bias aggressively with weekly areas of demand in control. And also long-term longs with a 3 months area of demand being in control. On the Euro Aussie, we have the monthly in a downtrend, the weekly in a downtrend, tried to reach the weekly area of supply and just couldn't. This is a weak, tested, used up area of demand. No longs allowed. Shorts could be possible if new areas of supply are created. On the EuroCAD, tricky scenario with the used up area of supply being in control. The weekly is in a downtrend, and then we have the weekly area of demand in control and a new area of demand on the daily, but only 1 year C. So this is, very, very tricky to trade. Euro pound, classic resistance of the monthly, bearish pink candles, bearish price action. Now we are at this bullish engulfing pattern. It could reverse from there. We don't know. Another tricky scenario because we have the monthly with the area of demand tested, used up, not able to close above those highs. We have also the 3 months area of supply being in control, but 3 months in an uptrend. So we get new areas of demand on the weekly, it would be good to go. But the weekly is not creating new areas of demand, it's creating new areas of supply, weak areas of supply. So we have weak price action, Weak price action also on the weekly. It's very tricky to trade this one right now. On the Euro-Yen long bias, this long is playing out from this week. We said monthly and uptrend, weekly and uptrend, aggressive longs into this structure, which is not good. Daily average supply was tested, eliminated, rallied 2 ERCs. That's daily playing out this week. And a brand new area of demand has been created with a very wide ERC. Long bias, expecting price to rally much higher. On the Euro-NOK, we have the monthly area of demand still in control, the 3 months area of demand in control. We need new areas of demand to be long on this one. We have that one up here, but we only have, okay, this is not an ERC, this is not an ERC. We have the ERC in the third candle. We need 2 ERCs. So this level is weak. We cannot set and forget. So on the weekly sequence, we have the weekly and downtrend, weekly supply and control. If this is eliminated, then we could have a daily average supply to trade short aggressively into the tested area of demand. On the Euro Kiwi, we have the monthly area of demand. We need new areas of demand in order to go long on a daily, but nothing happening. We had a new area of demand over there that hardly consolidated away. Eliminated, weak level. So we need new areas of demand. Right now, that's not there. Pound dollar, long bias aggressively into monthly area of supply. It has gained control. It could have done like this. I just couldn't. And now price was looking like bearish. And then suddenly we have this pink candle and it's starting to rally again with these new areas of demand on 4 hour. This is an aggressive type of trade into monthly areas of supply. The pound is very strong across the board, as we will see. On the pound Aussie, well, it's not an exception, but we have the weekly area of demand in control, new weekly area of demand, but now it's too high with the weekly area of supply in control and the daily nested area also in control. We have new areas of demand on the 4 hour, but this is an aggressive type of trade with a monthly in a downtrend and a weekly out of alignment. So very tricky. The 6 months out of alignment the 3 months as well. The month is in a downtrend. This one is out of alignment. This is an uptrend. Tricky one. I'm not trading Forex, only stocks, but I wouldn't touch this one if I saw this scenario on stock. No way. On the pound CAD, we have used up areas of supply under attack with bigger time frame areas of demand, 6 months and 3 months in control, expecting price to rally, but every single time price reached these highs. You see bearish pink candles, dropped. So could this happen again? Well, we don't know. It could, but now we have new areas of demand on the 4 hour, but it is very high. If this area here was created down there, like this daily area of demand, then great. But now we have 4 hour area of demand into daily areas of supply, class of resistance on the weekly. Very, very tricky to trade as well. Pound yen, long bias aggressively, expecting that monthly area of supply to be eliminated anytime soon. Weekly and uptrend, new area of demand has been confirmed. New area of demand daily in an uptrend, 4 hour areas of demand, long bias. Pound Kiwi, monthly area of demand in control, bullish price action, trail line confluence, no longs allowed with this trail line confluence. We need a bigger retracement. It did not retrace to this daily area of demand, which is a pity. So we have new areas of demand being created with bullish price action and monthly demand in control, creating this basic structure there, almost like a tweezer pattern, and then rally. Kiwi dollar, monthly and uptrend, weekly and uptrend, bullish confluences, long bias, and new areas of demand. We have these aggressive type of trade on the daily trying to play out, and new area of demand created as a reaction, confirmation of this daily demand and weekly bullish confluences. Kiwi CAD, expecting the monthly area supply to be eliminated. It's possible maybe next month or this month. It could create the ERC. If these highs are broken and the bearish engulfing pattern that was not able to consolidate away, then that's what's probably going to happen. Right now, where the daily area supply in control, we wanted price to drop down there. It didn't happen. It tried to again. We'll see. Long bias. Kiwi yen, long bias. Monthly and uptrend demand over there, weekly and uptrend, expecting that weekly area of demand, bigger penetration, which is happening. Daily and uptrend, longs and EFs demand, this could become an area of demand. Dollar CAD doing nothing on this one. Monthly and uptrend and all that, long bias, because we have the 3 months area of demand in control. We need weekly average demand. That's not happening yet. We need 2 ERCs like this one. So we have right now a daily average demand in control, bearish engulfing pattern, bearish engulfing pattern, 1 ERC waiting. And now with the dollar index dropping, losing steam, this is affecting the dollar cross pairs, as you will see. On the dollar yen, we have the monthly area of demand being in control, new areas of demand being created, potentially a weekly area of demand will be created down there if we get consolidation away next week. Potential longs. Swiss franc versus the dollar. We have the monthly in a downtrend, the weekly in a downtrend, trend line confluence, no longs allowed. Right now, it's nothing to go long at. This is not demand. So, tricky scenario. Long-term shorts with 6 months and 3 months supply zones being in control. Chinese yuan versus the dollar. Longs will be possible again at the monthly and 3 months areas of demand. Overextended on the weekly. It was trying to create an area of demand, but it just couldn't. So, right now, it's just not. One sec, because there is a bullish trend line here. Valley, and then that should have created a weak area of supply. So no longs. We need to start seeing weekly bullish engulfing patterns. We need ERCs on the weekly in order to think of going long. Since the monthly is in a downtrend, we need the weekly out of alignment, and that's not happening yet. Indian rupee versus the dollar. This weak area of demand on the daily is under attack with several engulfing patterns, and this weekly area of demand is also under attack with a bearish engulfing pattern, with a weekly area here gaining control at the top. Price could drop all the way down there on the monthly, where longs will be possible again. On Norwegian krone versus the dollar, the monthly is in a downtrend, the weekly is in a downtrend, bearish confluences for short and EFs supply, but there's nothing quality over here. Singapore dollar versus the dollar. This is very similar to the dollar index with the monthly area of demand in control. We need bullish price action here on the weekly. This is a real mess. So, nothing. South African rand versus the dollar. Monthly area of demand, longs and EFs demand. We've got here the daily area of demand, but only 1 ERC. This is not an ERC. Object tree is in structure. As you can see, it's not an ERC. We need 2 ERCs. This is also 1 ERC on the weekly. Longs requires confirmation. The major indexes, all of them, no exception. Even the European ones and the Asian ones, long bias. Breaking all-time highs, new average demand being created, long bias with weekly average demand in control. That's the S&P. Nasdaq, all-time highs broken again, longs and EFs demand, bullish price action, daily average demand playing out, long bias. Dow Jones, trying to create an average demand over there on the daily, weekly average demand, weekly uptrend, long bias. Russell, we expect the price to drop on there, it just didn't, and now we've got another bullish engulfing pattern with a daily average demand for aggressive longs with everything in an uptrend. I'm going to delete this old object. This will be also 3 months area of demand if this candle consolidates away at the end of March, and that's going to happen almost for sure. DAX 30, weekly area demand, weekly uptrend, monthly uptrend, new average demand on the daily, long bias. FTSE, weekly area demand in control, long bias, expecting price to rally all the way up to the monthly area of supply, and we're expecting that to be eliminated. Without a fight, it won't be eliminated without a fight. But still, lots of room for price to keep on rallying. Nikkei, we were expecting price to drop to the weekly average demand. It didn't happen. New average demand being created, monthly in an uptrend, 3 months, 6 months, everything in an uptrend, long bias. Australian index, long bias aggressively into these monthly average supply, under attack. You can see bullish price action trying to rally knee area demand on the daily, where potential longs can be possible. Hang Seng, we were expecting price to drop to the weekly area of demand. After eliminating this monthly area of supply, we have monthly and weekly areas of demand, long bias. Nifty, all-time highs broken again after reaching the weekly area of demand, weekly, monthly, 3 months, everything in an uptrend, including the daily. So, can use the highs of that candle. Long bias, Bank Nifty, same thing. Weekly demand gain control, responsible for eliminating this weekly area of supply, rallied strongly. Potential new area demand will be created over here next week if we get another candle consolidating away. Long bias. Bitcoin trying to break all-time highs again. This is a monster, and this is also a monster. 3 months, monthly area demand. We have potentially another area of demand being created over there. This aggressive type of trade, very expensive. Bigger retracement is ideal for going long on this one. The 10-year notes, we were expecting price to retrace to this daily area of supply counter trend, as it happened for this counter trend type of trades. It didn't happen, tried to, and then erupted again. So counter trend shorts on the way down to the monthly. Gold, monthly in an uptrend, weekly in a downtrend. Tricky scenario, we have this daily area of demand over there. Longs aggressively if we get new areas of demand. So for that, we need this out of the way. Natural gas, we were expecting price to drop to this weekly area of demand. It fell short of it. If you draw the level like this, one single candle is pretty wide. It took control already. So it looks like it's not coming back. Okay. So longs and areas of demand. And the last one, Brent, trying to reach the monthly area of supply, getting a little bit too expensive for longs, but we still have, this is a stronger level on this one, and it's under attack with this bullish engulfing pattern. So long bias, and that's why we can see stocks like, I don't know, BP rallying and all that. Why? Because we have like 12 months area demand in control. We've got like ExxonMobil, 12 months area of demand in control, playing the area of demand on daily, playing out and rallying. So that's how we could use the Brent correlation. So crude oil, I guess, something similar, but the chart is not looking that great because we have that. I haven't updated this one for ages because of this pink candle. So Brent is almost the same. Monthly supply has already been reached, as you can see. And it looks like it's under attack with this pink candle and all that. No shorts over there. And that could also happen. Same could happen on Brent, that level not being respected. With the 12 months area of demand control, 6 months and all that, and bullishing of the patterns. And that's everything. Enjoy the rest of the day and stay safe. Be happy. Bye-bye.